What's up, CrossCountry Mortgage? Jason Smith here from the Scottsdale branch that does a lot of FHA loans at the company here. I want to discuss the Arcasa down payment assistance program, why it's superior to any other program we have, why it benefits the client, and why it benefits your branch. First and foremost, as a loan officer or a branch manager, this is full margin. You're going to make full margin on these programs. Secondly, it's a market interest rate that has no overlays. It follows FHA guidelines to a T. Manual underwrites, regular DU underwrites, everything across the board. This is why this program is superior. It has no credit score requirements except for FHA. It has no income limits. It is a superior program. For the borrower, the benefit is huge because most other DPA programs, they have higher interest rates. Not to mention, they have either a second mortgage or a silent second mortgage, preventing the borrower from refinancing for 1 to 2 years, and you can't do a streamlined refinance. With this program, because it's one loan and the solar is being financed, you can streamline refinance after 6 payments, getting them a lower rate. Now, adding the solar in, this is kind of how I talk to the client about it, is adding the solar in is only going to add about $200 a month to your mortgage payment. You need to think about it this way. It's going to offset your electric bill by that much, except for maybe like spring, summer, and fall months when you're still going to have an electric bill. So your interest rate is identical regardless if you do your own 3.5 or if you do this program. The only difference is you're financing the solar and that's going to be installed 2 weeks after closing, which is going to raise your payment on average around $200 a month. Now, this program works with the nonprofit. They will wire your down payment funds to the title company. And then when you're working with one of our excellent real estate agents, they're going to ask for seller concessions, and you have the potential to come in for $1,000 or less out of pocket. But let's talk about the monkey in the room. The monkey in the room is solar has a bad name, just like a lot of other industries. And that's because those salespeople go around unchecked. They are not regulated like we are as a direct FHA lender. Number one, FHA does put limitations based on your purchase price for how much can be charged for the solar. Secondly, CrossCountry is a very responsible company, and we're making sure that we partner with the right companies that are not really going to overcharge our clients or basically take advantage, because FHA does do audits, and we want to make sure that FHA is happy with us. So that being said, the primary issue with solar is those people that are going around unchecked are selling solar systems with a second mortgage or a lease, and say the system should cost $35K. Well, with them, they're costing $50,000, $60,000, $70,000 because they have no regulations. Then when you pair it up with the second mortgage that has interest or a lease, now you're having a higher payment that doesn't really save you any money. For the most part, it's just the same as having an electricity bill, or even worse in some cases. Ours doesn't work like that. Now, being that said, think about it this way. If the solar system costs you $35,000 and your $400,000 purchase price, you're getting $14K from the nonprofit. On average, the minimum adjustment, because you actually own the solar, on an appraisal when you go to sell or refinance, the minimum adjustment for owning the system, because it's not financed through a second mortgage or a lease, is about $10,000 to $15,000. So let's say it's 10. You're getting 10 in value. You're getting 14 given to you for the down. That's 24,000. So when you break it down, the system really is costing you around $11,000 when you see those direct net benefits to you. Not to mention, your payment is almost identical. When you think about it, it's almost like you're financing your electric bill. So even if you do your own 3.5, your monthly outgo is almost the same. This is a huge program. It's great for the team. It helps your branch managers, if you're a loan officer, keep profit for the branch versus the other DPAs, which enables them to do more and hire more staff for you guys to support you. The client wins. Everybody wins. And I can tell you the guys that run Arcasa have a very high responsibility in their mindset of making sure the client comes first. So that's my little breakdown on the whole thing. I hope you guys start using this program, and it's working great for us. I've closed hundreds with 0 complaints.